Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, the 21st of January already. All right, so we have almost a full month in the books for 2020, if you could believe that. And we are nearing the home stretch for January. Today begins the impeachment trial in the Senate of the President of the United States. And with that, there will be all sorts of shenanigans pulled out by both sides. Doesn't matter which side of the aisle you're on. It's not a good day in American history, but it is what it is, and there's not much we could do about it except try to profit from it. Now, the one chart I'm looking at with a lot of interest this morning is gold. And when I went to bed last night, gold was up. It had broken out. And you could see here, this is a 30-minute chart. I went to bed around here during this bar, and it managed to rally to put in a new period high. And it came very close to real serious resistance at the 1570 mark, just shy of that. And it stalled and then rolled over. Now, I've looked on the news. I can't find a headline that would have caused this. In fact, the trial of the president should be putting a bid under gold, which is the reason why I believe that it was breaking out last night. But again, it failed. And you can see that we are breaking down, possibly setting up a higher low here, possibly setting up for continuation breakdown. It's not pretty. I'll tell you that right now. The fact that we broke out, rolled over, and we're now breaking down below support levels, not good. Not good at all. Let's pull back to a 4-hour chart. Now, technically, what just may be setting up here, and we won't know if it's a fact for a while, is we're getting a retest of a breakout point. I'm a firm believer in that. Traders are OCD, obsessive compulsive disorder, and we may be getting a retest of the breakout point. Quite possible. We broke out here on the 20th, rallied, now we're pulling back. We pulled back and held this last 4-hour bar. This is a new 4-hour bar that opened up at 5 a.m. Eastern Standard Time. Will it hold? That's the big question. The one bit of optimism, besides the fact that there's a lot of headline risk out there for the dollar, for the stock market, and bullish for gold, is the fact that the U.S. dollar is beginning to weaken up here a little bit. But it's having no positive impact on gold. We were higher, and we have since rolled over on the U.S. dollar. Gold is priced in U.S. dollars. One would think that you get a positive reaction by gold from the weakness in the U.S. dollar. Not to be. It's not happening. So we'll keep an eye on it. Let's check out silver. Silver is down as well. Similar price action as to what you're seeing with gold, in that we were stronger and we have since rolled over. And we are testing the lower bands of support. Moving on. Let's take a look at Palladium, which has been on a tear. I think that we have a top put in here. I'm making the call here. I think that we have at least a short-term top put in on Palladium. Take a look at this price action here. Here's your 4-hour chart. We put in the lower high. We are now breaking down below this, and we've closed down below, not breaking down. We are now past tense. We have broken down below the lower band of the rising uptrend channel on Palladium. Now, take note of the price action relative to the RSI. RSI is putting in lower highs while price was putting in higher highs. That's a bearish divergence. So we will be looking to set up a short of Palladium today or later on into the week, depending upon a couple of technical events that we'll be looking for. So Palladium looking very interesting. I mean, if you take a look at Palladium on a chart, this is using the PALL ETF, Palladium iShares ETF. We closed out the day at 232 spot 29, RSI at 91 spot 24. We're poised to blow a lot higher than that this morning. We still have volume on a daily basis, which is looking pretty good. Remember, this is closing price action for Friday. It does not include this morning's price action. Good morning, Sam. Taking a look at a weekly chart. We are piercing through the third standard deviation Bollinger Band, and we've closed above it. We closed above it last week, and I'll save you the technical jargon. We're not supposed to be there. Very extended here, and we're poised to put in a new weekly high, and this will not last. I don't care if they mine the last ounce of palladium, and it's in strong demand. This is not going to last. They never do, folks. They never do. So do not get lured in by all the hoopla. RSI on a 4-hour basis is at 96.47. This is not going to last. So I'll spare you more jargon on this. I'm telling you right now, this time, by the end of the week, this will have corrected. And we have Ultimate Oscillator putting in a lower high, despite the fact that price is shooting through the roof. We have divergences this morning. We have divergences at the close last week. And all you're seeing are just shorts getting taken out and bloodied. Good morning, Patrick. How about gold, Pat? Huh? Crazy. So again, what we're looking for here on Palladium, rally back, possible attempt to recapture the prior lower band of support, and we're looking for it to fail to break out above prior support. That will now act as resistance. So members, more to come. Let's take a look at the stock market futures. Actually, you know what? Let's go to oil first. And I want to take a look at nat gas, which just was annihilated. All right, so oil is down. We're flirting with a support level. We may get a rally off of this level. Why am I on a 1-hour chart? Let's go to a 4-hour chart. So we'll probably do a dance at the support level for a while. They'll test it, retest it, see whether or not it holds. I wouldn't be a buyer here yet. Let's take a look at nat gas, which is just a technical basket case. we've seen some improvement here. I mean, we put in a low on spot price of 1.83 yesterday, actually Sunday, and we have since rallied back and recaptured what was support is now support yet again. So we'll be looking for a trade here because the sentiment is just so horrible on natural gas, and the optics of the weekend price action just so poor. You have to take a look at it as a possible long trade. So we'll be looking for a breakout on nat gas, and we'll play the as we've done in the past, the UGAZ. That'll give us the volatility that we want. You can see here RSI confirming price action, putting in higher lows, good stuff. So members, more to come here on nat gas, possible trade. Bitcoin. Bitcoin had a unusual weekend in that it broke out here on Friday. Then we had a breakout point failure. Possible head and shoulders setup here. Left shoulder, head, right shoulder. Here's the neckline in red. It didn't help. Peter Schiff came out. For those that are not familiar with Peter Schiff, good morning, Arnold. How cold is it in Tampa? Peter Schiff is a gold bug, an economist, a very smart guy. He's a bear on Bitcoin. Doesn't believe in it, and for whatever reason, I was shocked to hear the news. He actually owns Bitcoin, and yes, Sam, you're right. Sam, were you not surprised to hear that he owned Bitcoin after hearing that? Wow, really? 30s in Tampa. That's a shocker. Peter owns Bitcoin, big bear against it, doesn't believe in it, but for whatever reason he owns it. His wallet was compromised. Whether or not it was using it properly, who knows? But apparently his Bitcoin was confiscated. That's what he says. I don't know whether or not that's been remedied or not, but apparently he's been compromised in some form or fashion. Whatever technician set up his wallet says that he's been compromised. And that may have had some sort of reaction on Bitcoin because he's an influencer, no doubt about it. Peter's a smart guy. He's been a little bit too bearish on the stock market. I said he was wrong there. I think he's wrong on Bitcoin, but otherwise on gold and the economy, the guy's just absolutely genius. So while I agree with him by and large economically, I tend to disagree with him that there's no future for Bitcoin and his bearishness on the market. He's been inaccurate on that. So we'll see what happens. Maybe he was just technical selling here. Who knows? It has nothing to do with Peter. But as it stands right now, Bitcoin is in a bit of no man's land. Let's take a look at the stock market futures. I took a look at the NASDAQ earlier, and we are not pretty on the morning. We're down over a half percentage point. And it appears as though we're going to break lower here. We've broken down below the lower band of the rising uptrend channel. On a 4-hour basis. Let's take a look at the Russell. The Russell's down on a percentage basis, about the same. Let's clean this up. Too many lines here. Much better. All right. Let's throw some new ones up here. More relevant numbers. Or lines, I should say. A little bit early. Stand right. All right, so pretty bad here. We've broken down below the lower band of support. Not looking pretty. And you would think that gold would be catching a bid right now on dollar weakness, on futures weakness. That reinforces my opinion that in all probability, especially given the risk of headline news coming out of Washington, D.C., that gold should be catching a bid. So I'm going to go back to gold in a moment to see whether or not anything's changed there. It may not change for a couple of hours, but I'm rather surprised to see the weakness here on gold relative to the weakness on the futures market. Money's got to be floating somewhere. We'll check out bonds in a moment. It has to be floating into bonds. In all probability, that's where it's going. But that means that yields are getting pushed lower and gold should be moving higher. Everything that should be forcing gold up higher is not allowing it to, for whatever reason. And that's a bit of a concern. So we'll have to figure that out. We always figure it out ultimately. Let's go to the S&P futures. Sam, there is news about an influence. Yeah, I read about that, Sam. I read about that. It's cross-contaminant between cross-contaminant. It's contagious between human beings. You get to see how much how well I did in science in school. Yeah, that could be a real serious impact on the futures, the stock market futures in particular. But again, I would think that that would be helpful to gold, but it's not. But I did read that. I was reading that this morning. That's probably going to grow to be a bigger story. We have the S&Ps down about 0.41% on the morning. Now, technically, we broke down below the lower band of support on the S&P back here on the 14th. And we're just flirting with an effort to try to recapture prior support ever since, to no avail. So this So we're rolling over here with lower highs, breaking down below support levels. The markets are weak. I want to go back to, as a matter of fact, let's not go back to gold yet. I want to take a look at bonds. Bonds should be rallying. Where are my bonds? Yeah. But strangely enough, we were higher and we pulled back. And we're flirting with a breakdown here. Money's flowing somewhere. It's not emerging markets, that's for sure. Emerging markets are breaking down this morning. Everything's selling off. Everything. Let's go back to gold, see if that's catching a bid at all. Yeah. All right, so what we'll be looking for on gold is, yeah, we're turning green now on this 4-hour bar. I believe, I'm still concerned technically, but I believe what we're seeing is a retest of the breakout point on gold. So again, for those that are just tuning in right now, we broke out on the 20th, rallied. We became a bit overbought relative to the third standard deviation Bollinger Band, not just on a 4-hour chart. When you take a look at a 30-minute chart, we really got extended overnight, and then we just rolled over. We have resistance right up here. I'm going to round it up at 1570, because in your longer-term charts, 1570 is stiff resistance. Let's go to a weekly chart. Forget the weekly. Go to the daily. It's not showing it. Right in here is the 1570 mark. So we'll be watching for a rally up and through that mark. A rally up and through 1570 would be extremely bullish for gold. But this is going to be a volatile day, folks. I wouldn't go buying dips today. These markets are very, very extended. In the equities side, they're still trying to gain a footing on the gold side, meaning silver as well, meaning we're building a base. We're trying to build the right side of this base, and we're going to get a lot of backing and filling. We still don't have a strong foothold to the upside yet. So members, we'll be looking to build on our gold mining trade, but not until we see a firm footing here on gold. Let's take a look at some other charts that have been requested. Where are my symbols? Tesla. Let's go to a weekly chart first of Tesla. I was asked to go over this, and the question was, is it overbought? Yes, but it could stay overbought. But I don't like last week's price action. I don't like the prior week's price action either. Whenever you get these wicks or candlestick, wicks or topping tails on top of, or shadows as they're called, on top of these candlesticks, it's a sign of selling into strength. And last week was very, very pronounced. And on a weekly basis, we have RSI at 83.21. It can go higher. We're at all-time highs. Look at this volume. Beautiful volume. Let's go to a daily chart. All right, so we saw some selling on the back half of the week. I don't think we're done here going up yet. Stokes are rolling over, lower highs, lower lows. But we may attempt to try to rally back. Do we put in a higher low? Or do we put in a lower high? I don't know, right? That's the test is always at the top. So all you need to do, if you're thinking about buying these shares, very, very simple. It's a rules-based approach. If we break down below this lower band of support, you avoid. I wouldn't go shorting it. If you break out above 547.41 and you appear poised to close there, then you can look to put on a long trade. Otherwise, you're in no man's land. If you try to start buying it here, hoping that it's going to go up, and you're going to hope that it breaks through resistance, that's a fool's errand. You don't want to play that game. You want to buy the event, buy the breakout, and raise stops, because you have a lot of indicators out there that are implying that you have some distribution of the shares, as noted by, again, let's go to these topping tails on a weekly basis. Take a look at this. That's a sign of sellers. Let's go to a 4-hour chart really quick. What puts are you looking to sell or calls on NUGT, Pat? I'm going to assume that. If we break on gold, if we break down to new lower lows on a daily basis, I'm not going to do either. I'm going to look to lighten up, to be honest with you. because I won't understand the trade anymore. So, and I don't like the close on Friday of NUGT. I don't like it at all. And I'll bring up that chart for the benefit of just illustrating what I'm talking about. What Pat's referring to is we've been doing a lot of put selling, and this is not betting that the shares of NUGT are going to go down. We haven't been playing that game per se. We've been selling puts to generate income. We've been selling calls to generate income. Now, when you are putting on those types of trades, you're betting that the shares are going to move up higher. So you're bullish on the shares. Now, on Friday, we had very, very late day selling on NUGT and on gold. For whatever reason, my mouse is being twitchy here, so sorry. And we backed off. We do have resistance above at around the $32.50 mark to $33 per share. We're well aware of that. Was there selling in advance of an extended weekend? Perhaps. But the fact that we closed down below support is a bit of a concern. The fact that this morning that gold has given up its gains, is now negative and flirting with a possible breakdown. Maybe it'll bounce back. Ideally it does. I've given you the reason why I believe that we have had the pullback and we're probably going to bounce back, and that's a retest of the breakout point. What if I'm wrong? What if we pull back and break support? Do I want to get married or re-engage to NUGT for another week by selling weekly puts or selling weekly calls? No, because if I stop out, then I'm naked. And I don't want to be naked on a naked call position. That's a very, very risky play. So, Pat, we'll make that determination as the markets open up and we see how this, meaning the price of gold this morning, is resolved. Is this what I suspect? A retest of the breakout point? Let's make this red to represent support. If so, and we break out to new daily highs on the day, I don't know whether or not I want to cap my upside on NUGT by selling covered calls. I may, if in fact what I suspect is playing out here, I would rather sell the puts. And that way, if they're put to me for a good reason, and that's because I wanted them at a certain price plus a discount, and they're put to us. I don't think I'm going to be doing anything today on NUGT, to be honest with you. I think it's just going to be watch and wait mode for NUGT. So I'm a bit concerned about this price action this morning on gold. I want to leave myself room to stop out, if necessary, of a portion of our position. And if anything, on that pullback, we become intraday oversold, then I'll sell puts to get back involved at a lower price. Let's take a look at what else was requested. XLK, the technology sector. Let's go to a weekly chart first. I gotta tell you, it still looks healthy. RSI is at 83.06, looking strong. We closed very close to the highs of the week. How's our volume? Oof, look at this volume. Horrible. And it's not so much the week's standalone volume. It's the trend that's concerning. So XLK weekly basis, looking good from a price perspective, from an indicator perspective, momentum perspective. Volume is a concern, no doubt about it. Daily chart still looks healthy. Good volume on Friday. We have a bit of a divergence on Ultimate Oscillator here. We're putting in higher highs on price, lower highs on Ultimate Oscillator. Now, would I go opening up a new position right now? Probably not. It's a bit extended here, especially with the markets weakening up this morning and breaking support, no less. So I would avoid anything long right now until I figure out what's going on this morning, because nothing seems to be doing all that well, except for going back to bonds for a moment. For the 10-year Treasury note, the bond spectrum, Treasuries, notes, bills, they're all doing okay, but they're off their highs as well. So a lot of indecision out there this morning. Now, if we get a breakout on the 10-year Treasury note, that means yields are getting pushed lower. That means there's more fear being built in to the system. That's probably going to mean some weakness for equities, and we should see a bid under precious metals. So we'll keep an eye on gold in particular, obviously, which I keep coming back to. This bar will close out at 9 a.m. Okay. Ooh. All right, so Pat requested IBM. Let's go. I'll come back to the daily chart. Let's go start with a weekly chart here. Let's see if I have this annotated already. Yeah. All right. So we broke out on IBM several weeks ago here on the 16th, or the week of the 16th of December. This is a weekly chart. We have pulled back since retested. Hey, Kurt, I already went over nat gas. You can catch it on the replay. It's bouncing back on a 4-hour basis, recaptured support. We may have a trade to the long side there. We'll keep an eye on it. We pulled back. We did a retest of the breakout point on gold. We have now seen a follow through, a continuation move higher on a weekly basis. We have a breakout validating the breakout on price on RSI. Volume last week could have been better, but it was about average. We have a breakout and follow through Ultimate Oscillator, Stokes moving up higher. Here's when MACD head and shoulders setups don't work out. That's why it always pays. Wait for the break of the neckline. And you had it here, but you didn't have, I guess you did have a breakdown, a serious breakdown in price. So it did work out. Okay. Let's go to the daily chart. Now, when I first pulled up this chart, I had a reaction, which you probably caught. And is that the Friday's price action was absolutely outstanding. One of my favorite setups. And that is a bullish engulfing day on Friday, meaning we completely engulfed Thursday's price action. Very, very nice chart. Volume, very nice, rising sequentially. The shares are under accumulation. I like the setup here. The only question is obviously how the market's going to open up. Perhaps it's going to provide a buying opportunity buy the dip, keep it small, and then add more on a continuation move higher if you're proven right on the trade. Good close. This is a 2-hour chart. Good close. We closed at the highs of the session on Friday. Nothing not to like here. LVS. Las Vegas Sands. Again, rinse, wash, repeat. Stay with the same system. Weekly chart. This is a huge discretionary name too. Discretionaries broke out last week. It's a beautiful, beautiful W formation. Left side of your W, pivot point here at 67.02. Right side of your W. Here's where we cleared it, right here. We broke out the week of December the 9th, and it's been off to the races ever since. Now, last week, we came close to all-time highs, but no cigar. That's probably where we're going if we get a recovery today in the markets. Let's go to a daily chart. So before we leave the weekly chart, nice sound, solid base built here. But the question becomes, do we break out or do we put in the lower high? The test is always at the top. That's what we'll be looking for. A clearing of $75 per share. Daily chart. Now, I'll warn here, on a daily basis, while we're putting in higher highs, RSI is really not confirming with higher highs. RSI should be validating that move up higher, and it's not. Now, if we close out the day and we've broken out above this upper band of resistance, then my concern is alleviated. But as it stands right now, a bit of a concern. And keep in mind that $75 per share is all-time high resistance. So you're right there. Me, I would be very patient here. And I would wait to see whether or not we got to close above that $75 per share mark. Hey, Arthur, good morning to you. Bonnie, good morning. How about applying? Bonnie, can you clarify that a little bit? Oh, Apple, got you. Okay, you got it, Bonnie. Yeah, Arthur, I went over Palladium a little bit earlier. It's setting up as a short, dude. It's right there. If you go back to the replay, it's like 2 minutes, 3 minutes in. It's setting up as a short. I mean, real serious short. I don't know whether using PALL. I forget whether or not it's optionable. I know PALL is thinly traded. I don't know whether or not we're going to be able to get the shares. No, there's no options on PAL. So I'm not quite sure how to short it yet. We'll try to figure it out. You got it, Arthur. All right, so let's get back to LVS really quick for Pat, LVS. All right, so I'm concerned about the daily chart and that negative divergence and the fact that we need to clear $75 per share. Close above $75 per share. That gets me bullish on LVS, and we need to see a recovery in the markets. I can't buy a casino when the biggest casino in the world, excluding our bond market, is down about a half percentage point on the day. So I would be cautious there and wait for that. Wait for recovery in the market and wait for a close above $75 per share on LVS. What was the other one? We have Apple for Bonnie. I'm going to get to Pat, Netflix. And we're going to leave off with Apple for Bonnie after Netflix. Again, we go with the weekly chart. And folks, if you're just joining, if I can ask you to hit the like button, it helps me out with the YouTube algorithms. And leave a comment or do something different. I can't get any subscribers on my channel. I do more live streams. I know what to do with. I got these kids out there. They start off with 1 subscriber. 2 weeks later, they have 5,000 subscribers. I can't get above 2,000 over 5 years. It's crazy. So I'm doing something wrong. Netflix, weekly chart. We recaptured support last week. What I like to do here is extrapolate out prior resistance levels. Oh, Christ almighty. All right, so there's resistance level number 1. At around 360 per share. Actually, I shouldn't even say that. You do have a lot of resistance down here. 350, then 360. A lot of overhead supply in this area here. A lot of congestion. But where I would be a buyer of Netflix is on a close above 360 per share, because that gets you above this prior upper band of resistance. Keep in mind that it marked an all-time high going back to June of 18. Wow. And ever since then, every time we've rallied up and into that resistance level, back here in April, failed. Back here in July, failed. Here we are yet again, we're rallying back. That is going to be like a bullseye for technicians. I'm telling you right now. They're going to be looking at that 360 mark and watching for a close above it. You get a close above it, the technicians are going to get all excited, and they will be looking for the next resistance level after that at 390 per share. Let's go to a daily chart. A lot of indecision here. You have some divergences going on as well. Let's update this. Bob, you should do some simple videos about AT with good titles. Yeah, I know. I'm not good with doing the titles and the thumbnails. I know I suck at that. I hope I don't get in trouble for saying S-U-C-K. AT, what is that, Sam? AT? I'll give it a shot. I'll give it a shot. I'll take your advice. Did you mean TA, technical analysis? All right, so here's what I mean. Gotcha. Okay, thanks, Sam. Appreciate it. This is actually very close to a breakout here on, thank you, on RSI. I'm going to bring this up on TrendSpider as well. I use TrendSpider as my spell check for technical analysis, just in case I missed something. And I think what we're seeing here is a clear picture of a stock that is fighting through a lot of overhead supply. Thank you for those likes, folks. I appreciate it. Thank you. A lot of overhead supply above. And it's not a bad thing. You just need to be aware of it. I wouldn't be a buyer again until we close above, at a bare minimum 350. 360 is definitely a level where you'd want to be looking to buy more. And here's what I meant earlier about negative divergences. This is not what you want to see. I mean, we've been pressing up higher, yet ultimate oscillator is moving downward. So I see no compelling reason at this point in time to get involved here. It's all about price and volume. You can have all the indicators in the world out there. In the end, it comes down to overhead supply and can we get through it? Supply, demand. Can we get through it? And do we have institutional support that is helping us get through it? Without that institutional support, mom and pop buying 100 shares is not going to help us, A, to break out above this overhead supply, and B, to stay there. That's most important, right? To stay above that overhead supply. So I don't see a compelling reason to be involved here just yet. I'll bring it up on TrendSpider. Earnings tonight on Netflix. That should be interesting. Sam, I don't know how to trade. Yeah, you're right. A lot of those. You're right. And I'm aware of that, but I don't. I do a lot of live streaming. I know you're right. I got to do more of it. I got to put it out there. Let's go to. We'll go to Netflix. Netflix on TrendSpider first, and then we'll go to Apple for Bonnie. I'll leave off there. All right. So what I'm using right now are the raindrop charts, and this is a mixture of candlesticks. I'll go to the candlesticks in a moment. In fact, what I could do here is, let's do this. All right. So for those not familiar with what a raindrop chart is, this is a raindrop chart. It's a mixture of candlestick and it's a mixture of VWAP, volume weighted moving average. And the morning session of trade is reflected on the left side of the candlestick. The afternoon session, and these are daily bars, the afternoon session is represented on the right side of the candlestick. Now, ideally, like back here on the 16th of December, you have a fat or a pregnant right side of your candlestick at the end of the day. You want to see this green and fat at the end of the day. That's a bullish setup. Whereas what we saw for the past several days on Netflix was a fat lower end red of the candlestick, implying selling pressure into the close. You don't want that. That's distribution at the end of the day. That's institutions. They're setting themselves up for the next day. Does that mean that it's going to definitely break down? No, but it's just not a great technical indicator. And you're not really seeing that selling pressure reflected on the candlesticks, the usual candlesticks, normal everyday candlesticks. So using the raindrop charts, not looking great here. Let's bring up some overlays. Let's go to a weekly overlay. We'll take off the raindrop charts, go to our standard candles. We'll go back to a single pane view. No overhead supply reflected. Oh, here we go. This is the reason why I don't have it selected. Okay. Still, no overhead supply reflected on a weekly basis. Let's go to a monthly basis, and there you have it. So we have a monthly overlay, secondary overlay, and dashed line on a daily chart. I said 360. This chart's saying 355 per share. I would go with my 360 to be honest with you. So at a bare minimum, we're looking for a breakout above the 355 mark to 360, which represents a monthly breakout on Netflix. Now the alert is set. Go to a monthly chart, and there you have it. You can see that on a monthly basis, we are in the middle of a huge triangle formation. And here we have our upper band of resistance. We need to see it close above it. Right now, all we're doing is we're sitting within a trading range, for a multi-year trading range at that. There's no compelling reason to get involved here right now. Is that is it really? Gold selling off, great. Yeah, this is not pretty. Let's check out I'm sure he's talking up stocks. S&P's about the same. NASDAQ about the same. Let's check out the dollar. Dollar dropped like a rock. Bouncing back now a little bit. Okay. Interesting. Think about it. That guy's 75 years old, thereabouts. He's up at 5:52 in the morning giving speeches. Amazing. All right, let's get back to Netflix. So again, I would wait for a retest of the support level here. Not a breakthrough. I want to see a touch and bounce. So 2 ways to play this. On a retest of this lower band of support or a breakout above this upper band of resistance. One of the two. Just in case you want that. All right, let's bring up Apple. Apple I've been speaking about as a possible short for a few weeks now. And on a weekly basis, this still looks like a very powerful chart. We have RSI on a weekly basis at 90.06%, but we did flatten out last week. So you're beginning to see some chinks in the armor of Apple. Meaning that RSI really began to flatten out last week while price surged higher. Volume is still good. Let's go to a daily chart. All right, so here we have another instance where, and again, when you're trying to trade extreme trades, you're like a detective. You're doing putting your Sherlock Holmes cap on, and you're looking for signals by the market that momentum is beginning to wane. Because simply to hope and get short of Apple, because you have RSI above 80, you would have gotten, or 70, or you would have gotten short back here, and you would have had your face ripped off. What I like to do is I like to look for divergences. And we have price, which is moving up higher, yet RSI is putting in lower highs. And we did last week break down below support on Stokes. So while Stokes is still hooking up, we did break down to lower lows while price is pushing in to new higher highs. Maybe by the end of the day, they'll be back above that support level. I'm not that smart. We're not going to hope that it fails. We'll look to short when it does fail. Now, I wouldn't be a buyer here. It's way too long in the tooth for me. It could go a lot higher for all I know. Let's go to a 2-hour chart. And the way it closed out on Friday, it appears as though, in all probability, it wants to go higher. It will go higher. Nice sound base built on Friday, setting the stage for a rally this morning. We rallied into the close on Friday. We did so on volume. So at current, while I would love to hang my hat on a weekly chart saying you have to be crazy for not shorting these shares because RSI is above 90, can't do it yet. Strong stocks tend to get stronger, weak stocks tend to get weaker until they don't. And Apple is still strong. Are there indications that it's beginning to weaken up here a little bit? Yeah, sure. It's there, not enough to put money to work yet to the short side. And with that, folks, I'm going to say have a profitable trading day. If you can hit that like button, I'd really appreciate it. Thank you to those who already did. Hit the subscribe button. And everybody have a profitable trading day and be well.